Africa's maize market is splitting in two. East Africa is holding firm while Southern Africa may be heading towards surplus pressure. This African grain market overview is made possible by Collateral Management International and Zimmatic irrigation systems. Collateral Management International, or CMI, works across the continent, helping banks and other financiers keep their commodities secure and well managed. With over a decade of experience, they're known for their reliable storage solutions, trusted staff, and professional stock monitoring and inspection services. CMI helps make sure everything runs smoothly and securely. CMI, your trusted collateral manager in Africa. Just a quick reminder, about 78% of the people watching these updates aren't subscribed yet on our Facebook or YouTube channels. Please double check if you are. It's completely free and it's the easiest way you can help us grow and keep this content going. Your support really does make a difference, and in a real way you are helping shape the future of Africa's agricultural industry with us. So thank you for your support. Remember, you can get detailed stock numbers, trade projections, and scenario analysis in Commodity Insight Africa's full weekly grain report, so make sure to subscribe today. But with that said, let's start off with where maize prices are currently trading across Africa, and then we'll look at what's really driving the markets right now. In South Africa, white maize is trading around $210 per metric ton. The market softened this week as improved rainfall forecasts reduced some of the weather premiums. In Zambia, prices remain significantly higher, trading in the upper $300 per ton range in the Lusaka region. That's still well above levels that would make exports competitive. Zimbabwe is trading around $330 per metric ton in Harare, largely following South Africa's import parity prices. Malawi is sitting around the mid $260 per metric ton level, but sentiment is starting to soften as green maize begins entering into the market. In Tanzania, maize in Dar es Salaam is trading in the low $300 per metric ton range. Kenya remains one of the higher priced markets in the region, trading close to the upper $300 mark per ton range. And Uganda is around the mid $300 level at the moment, supported by steady export demand. So that's the current price picture across the continent. Now, what's driving these markets? In East Africa, the story remains relatively firm. Kenya is structurally import dependent, and the key issue is whether prices move high enough to unlock stronger flows from Tanzania. Uganda has also commissioned a large ethanol plant that will use maize as feedstock, which could gradually reduce exportable surplus as well. So East Africa is under pressure at this stage, and it remains stable to support it. Tanzania is the swing player in the region, however. There are strong indications that significant stocks are being held in this region. If Kenya's import program accelerates from April onwards, Tanzania effectively becomes the price setter for East Africa. That dynamic will be critical in the coming months. In Southern Africa, however, the risks are building differently. Zambia is sitting with very large stocks and rainfall has been good. Early indications suggest another solid crop from Zambia is possible. The challenge is that the current price levels are too high to compete into regional export markets. If Zambia lowers prices to move volume, that could place pressure on the entire Southern African maize complex later this year. South Africa already softened this week due to improved weather conditions. Malawi has green maize coming into the market and softer sentiment developing. So the second half of 2026 could look very different from current levels, especially if surplus stocks begin to move. To summarize, East Africa remains structurally supported while Southern Africa is building potential surplus risk. The key pivot in this market may come from Zambia, depending on how pricing and export flows evolve into the months ahead. For detailed stock numbers, trade projections, and scenario analysis, those are covered in Commodity Insight Africa's full weekly report, so make sure to subscribe today. Don't miss the Zimmatic offer. Special promotional pricing on Zimmatic's 9500P and 7500P pivots with complete pivot, pump house and pipeline system options available. Financing through Standard Bank makes it easier than ever to invest in quality that lasts for years. Speak to your nearest Lindsay dealer today or call 021 986 8900 for more information. Terms and conditions apply. This episode was made possible by Collateral Management International and Zimmatic Irrigation Systems. Thanks for tuning in this week and see you next week again.